morning. I'm Maiki Oreta. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead. This is Business 360. First on BNC, Congressman Leandro Leviste is threatening to name those blocking the suspension of the value-added tax on fuel, while Executive Secretary Ralph Recto denies involvement. Another round of relief may be on the way for motorists, with fuel prices seen to roll back again next week. The Bangko Sentral ng Pilipinas is signaling it may have room to raise policy rates as inflationary pressures build. And economic uncertainty. Amid this economic uncertainty, how's the property sector holding up? David Lee Chu, CEO of Lee Chu Property Consultants, joins us later for a read on the market. And the Senate Blue Ribbon Committee is pausing its investigation into the multi-billion peso flood control scandal. Let's find out why. The push to scrap the value-added tax or VAT on fuel is heating up, with Batangas Congressman Leandro Leviste now daring the House to put the measure to a vote. And if it stalls, he's ready to name those he claims are blocking it, including Executive Secretary Ralph Recto, who is denying the allegation. Isaiah Mirafuentes has this report.
The VAT on oil should also be removed. This is the insistence of several lawmakers, saying the public would feel its impact more. Batangas Congressman Leandro Leviste claimed that Executive Secretary Ralph Recto is allegedly blocking the removal of VAT. Recto was the primary author of the e-VAT law when he was a senator in 2005. In an exclusive interview with Bilyonaryo News Channel, Leviste challenged Ways and Means Committee Chair Miro Kimbo.
Usapan ko kay Chair Miro Kimbo, meron siyang chance ngayong araw na magpahayag na pagbobotohan na natin ang pagbaba ng VAT bago natin isasama ang iba pang mga pangalan sa usaping ito.
He added that if not, he would reveal other lawmakers' names who allegedly told him who is blocking the proposal. Leviste insisted that aside from Recto, there are others he may name who are hindering the VAT proposal.
Ilalabas natin lahat ng mga humaharang sa pagbaba ng VAT, baka magkakaroon ng konting hiya ang mga miyembro ng kabinete, o kung gusto naman nilang depensahan ang pagharang sa pagbaba ng VAT, pwede silang humarap dito sa Kongreso.
Recto, however, denied Leviste's accusation. In his message to BNC, he said the executive branch cannot block proposals in Congress and that the economic team only provides policy input in line with their mandate to ensure continued funding for essential government services. Recto added that tax-related proposals must be carefully studied to ensure they do not weaken the government's capacity. He said measures must be well thought out and solutions should be long-term. Isaiah Mirafuentes, Abante.
The debate over fuel tax relief is also heating up, with lawmakers now questioning the Department of Finance for leaving diesel and gasoline out of the suspension. They warn this could limit relief, not just for businesses, but also for middle-class and low-income Filipinos. Ways and Means Committee Chair Miro Kimbo also pointed out that economic managers previously said a full suspension across all petroleum products was still within reach.
It was very clear upon the recommendation of the DOF that we could afford a suspension on all the petroleum products. We never heard from any of you at that point in time saying that we can only afford to suspend kerosene and LPG.
But the DOF stands by its position, saying cutting excise taxes on diesel and gasoline would mostly benefit high-income users. Instead, it argues targeting LPG delivers more direct and immediate relief to vulnerable households.
85% of diesel consumption is coming from the 3 richest decile. When you actually suspend the excise tax on diesel, ang pinakamakikinabang po nito are those 3 richest decile.
As oil risks build globally, President Ferdinand Bongbong Marcos Jr. is pushing for regional solutions, including shared oil stocks across Asia. At the Asia Zero Emission Community, or AZEC Plus online summit, he warned that Asia's exposure to supply disruptions could keep inflation elevated and slow growth if countries don't coordinate more closely. He also reaffirmed the Philippines' commitment to stronger energy security and more resilient supply chains.
A disruption that begins in the Strait of Hormuz ripples through Singapore, the Straits of Malacca, and onward to Manila, Tokyo, Seoul, Jakarta within days. Our vulnerabilities are shared, and therefore so must our responses be. It is clear that the ASEAN Framework Agreement on Petroleum Security, or APSA, matters more now than at any point since its adoption. The enhanced APSA, endorsed at last October's ASEAN Ministers on Energy meeting in Kuala Lumpur, establishes the architecture for coordinated emergency responses, emergency supply sharing, and, critically, joint oil stockpiling. The Philippines fully supports its operationalization, and we will be an active participant in its implementation.
The Maharlika Investment Corporation, or MIC, the government's sovereign wealth fund, is looking to team up with a state-owned Philippine National Oil Company, or PNOC, and private firms as it moves to expand the country's energy reserves. MIC President and CEO Rafael Consing told a House Energy Committee hearing that PNOC, the government's oil and energy arm, has the funds to build up reserves, but lacks sufficient storage. Consing says this is where MIC and its partners can step in, providing capital while leaving operations to private companies.
So the idea is that we can put together a consortium with the PNOC and the private sector, okay, wherein they can contribute, let's say, their land as their asset into the consortium. We, alongside other members of the private sector, can invest in the tank farm and then, in fact, outsource the operations to the private sector because we're only the capital provider po, no? So we don't know how to operate this. So we will leave it with the private sector to run it, but we will catalyze the investment if we get into that.
After weeks of painful hikes, Filipinos may finally get a bit more relief at the pump, with another round of fuel price rollbacks expected next week. Chesulit reports.
Motorists may expect another round of rollbacks in gas prices next week. Based on the 2 days of trading in the Mina Flat, Singapore, the benchmark used in pricing oil or finished petroleum products, prices of diesel, gasoline, and kerosene have gone down. According to an industry source, market premiums also declined, ranging between 2 to 3 pesos last week. 3 more trading days remain in the regional market before determining the final price adjustment for next week. The Energy Department explained that it closely monitors oil prices in global markets. For the first time, the agency also presented to the public the computation used by the Oil Industry Management Bureau for the price adjustments movement. Apart from the price per barrel, factors such as market premium, freight or logistics, insurance, and the peso to dollar exchange rate are also considered.
This has been the practice even before pa, dati pa, and internationally this is how they do the pricing, accounting nila. So and it's allowed under based on the oil deregulation law.
The DOE has also ordered oil companies to regularly report their available storage capacity. This is in line with Executive Order Number 110, Series of 2026, which declared a state of national energy emergency. This would enable the DOE to more closely monitor oil supply and respond immediately in case of shortages in gas depots. The agency warns non-compliance may result in penalties, including suspension or cancellation of permits. The DOE also reported the expected arrival of 2 more oil cargo shipments.
Naka 2 cargos na tayo na deliver. Yung second cargo was completed nitong April 10.
One of these shipments is expected to arrive within the week, followed by another delivery heading to the southern part of the Philippines. Chesulit, Bilyonaryo News Channel.
Up next, amid softer growth, David Lichu of Lichu Property Consultants breaks down the real estate landscape. Keep it here on Business 360. Welcome back. The Bangko Sentral ng Pilipinas is signaling it may still have room to raise interest rates despite a recent easing cycle and an off-cycle decision to keep rates steady. BSP Governor Eli Romolona Jr. said the central bank can still tighten policy. In an exclusive interview with Business World on the sidelines of the IMF World Bank spring meetings in Washington. He says that the country could see a wider negative output gap as growth slows amid these pressures, including the fallout from the flood control corruption scandal. But Romolona adds the BSP will avoid over-tightening as it balances inflation and growth risks. The next BSP policy meeting is set for Thursday, April 23rd. The economy is slowing and the window for lower rates is narrowing as inflation edges higher. After a period of rate cuts, the Bangko Sentral is now signaling it may have room to tighten again. With costs rising from the oil shock and more supply coming online, how is the property sector holding up? Joining us now is David Lee Chu, CEO of Lee Chu Property Consultants. Hi, David.
Hello.
Good morning.
Hello, Maiki. Good morning.
Okay, interesting times. Growth has softened. Our economy is under pressure, and we want to get a read from you how the property sector is doing. But before that, I want to enumerate some of the series of shocks this sector, this economy has gone through. Specifically in the property sector, there was the pandemic and the move to remote work, and the POGO exit, the flood control scandal, and now this extended oil shock. What's your read on this sector right now, Q2 2026?
Yeah, so first it's going to be really tough. The next 6 months is going to be really tough for many people. But I think the most insulated from all of this will be the office market, because as the world goes through the crisis, especially now, they're pushing more jobs to Philippines.
Okay.
I mean, it's not just the Philippines going through this crisis. I mean, ever since COVID happened, we've been through 7 global shocks, 6 or 7, and 6, 7. Anyway, and then it doesn't seem to be ending. There's going to be more and more of these uncertainties happening, and so many companies in the world are pushing jobs to Philippines. We saw that in March. Despite all these issues, most companies still want to come in. The pipeline for second quarter 2026 look healthy, and if they happen, and it looks like it's going to happen, you're going to see the office market continue to grow. I think logistics will have a tough time. Retail will have a tough time. Tourism will have a tough time. The high-end condo market and the high-end residential market in closed villages will be okay. The middle market condos will have a really, really tough time.
Okay, that was a lot to digest, but let's break it down. So you said that the best performing asset class will be the office market as companies look to the Philippines, as international companies look to the Philippines. I want to ask you, how sustainable is this? And are these long-term BPO expansions? Are they relocations, or are they just short-term cost plays?
They're all of both, but mostly expansion. I mean, there are 6 big movers right now in BGC. That's going to wipe out all the meaningful stock in BGC.
Okay.
That will bring vacancies in the office sector in BGC to low single digits. Right now it's about 8%. And then because tenants cannot find the space they want in BGC, they're shifting to Makati, which is why we saw this big jump in office demand in Makati in the last 6 months.
Okay, that's a real nice spark of hope. You mentioned the 6 big movers. Can you enumerate?
They're all from different industries, but some of them are coming here for the first time.
Coming here for the first time.
So despite everything that you see in the world, there are still companies that are looking to set up their first operation here in Philippines.
Okay, that's interesting. It's very hopeful. And how do we capture more of this? What do we need? What do we need to do in order to capture more of this?
Stability, confidence. Don't change the rules too much. Lessen corruption. Put people to jail.
Okay, we have yet to see traction on that end, but yeah, it will help everybody. Going back to growth and the macro picture, growth, we're coming off 4.4% GDP in 2025.
Yeah.
Forecasts for 2026 have been downgraded. The IMF from 5.6 to 4.1. Moody's from 5.5 to 4.9%. Can you break down what this is doing to demand across the key segments? Residential, office, retail, and industrial.
Yeah. I think despite that downgrade, 4% is still very good. It's better than 1-2%. Like if you look at Thailand, they had a 1.6% growth rate last year. So I still think it's going to push the market further, especially in the high-end residential sector and the condo sector. I mentioned that the middle condo market is going to be hit hard, and there is money in the system. They just need to be motivated enough to take that money out and bring it to real estate. So developers are going to start improving terms from what it is today, and they're really good terms today. But they're going to have to do better to be able to get money flowing again, and buyers releasing their cash. I do think that the foreign market is realizing that they have to diversify out of the Gulf. So many people invested in Dubai, Abu Dhabi, and now we've hosted a handful of people in the last few weeks since all the Gulf issues happened. We've been receiving interest from Gulf investors native of that area to say, hey, the Philippines is underrated, underappreciated, and it's time for us to
here.
look. Yeah. So they're looking to set up stuff here.
Okay, that's interesting. As you know, speaking of the oil shock, I want to ask how it's hitting property on the ground. You know, we talk about oil and inflation at the macro level, but how is it feeding into construction costs, pricing, and ultimately demand?
Yeah, a lot of projects are delayed, and many people who are about to start projects, big and small, whether it's a house or a building or a hotel, they've put many of these projects on hold, and until they see visibility of construction costs, because nobody can guarantee construction costs right now. Many people are concerned that if they sign up with someone, you can say, hey, you guarantee this price, they're going to go bankrupt, the projects are going to put on hold. It's going to lead to bigger problems. So the best thing for some people to do, most people to do, is to just sit and wait out and start when things are clearer.
Sit and wait out. So who are the buyers in this market?
Still the high end, and it's still pretty much across the board. There are buyers. The buyers in the low end, the buyers in the mid end, and the buyers in the high end. It's still the same cast of characters. You've got the OFW money still flowing in. Yes, we will have some displacement from the Gulf, but you have to remember that many employers in the Gulf want Christian talent, labor, and they only find that in the Philippines.
Christian
at a scale,
talent, labor. Why specifically Christian?
I guess because especially with everything that's going on right now, there is an appeal to get more Christian labor into their markets, whether it's in Europe or in the Gulf region.
Okay, all right. Turning to the luxury segment, we're seeing top-end projects like Aurelia, the Estates, Park Villas turning over. What is happening to demand in this segment? You know, we're coming off the flood control corruption scandal. That hurt demand in this sector. And then now this massive oil shock, extended oil shock. How is it affecting the luxury market today? Yeah,
there are a few light holders there that need to sell. So they're being weeded out now, but they're less than 10% of the total stock of the building. In one of these buildings, there's like one major owner that will not sell if he doesn't get his price. So he will just keep holding and renting this portfolio for a while until he gets his price, which I think he will. I like to stress that in the last 6 years, the luxury market in the condo space and the housing space has grown the slowest. The slowest. So you can look at that glass half full or half empty, right? You can say, oh, it's the slowest, I got to shift out of this to something faster moving. Or you can say, now is a good time to buy because nobody is buying or very few people are buying. Transaction volumes are coming down since Iran war, okay? They're probably going to keep coming down, the transactions, until there is stability in the system.
Yeah. So how are developers reacting to this?
Favorable terms, extended terms, developer financing, better pricing, and lease rates continue to fall across all levels of the residential sector. So I keep, like what I've said in the last show with you, it's the best time to go and rent because the rental prices are so low.
Yeah, and everybody needs to attract
these
renters.
You can offset your transport cost by renting closer to work.
Yeah.
Where it's become much more affordable.
Yeah, and taking a look at the outlook at what comes next, the BSP's Monetary Board is going to be meeting on April 23rd. We've been on an easing cycle, but at a recent off-cycle meeting, the BSP chose to keep rates steady at 4.25%. In this environment, with inflation picking up, people are saying that the BSP's window for easing has significantly narrowed. What do you think they're going to do on the 23rd, and what do you think is going to be the net effect on the property market?
Everyone's waiting on Trump. Trump is trying to force the U.S. to bring interest rates down, and if he is successful, then global interest rates will come down. If that doesn't happen, then I think many central bankers will sit it out, hold it, or even raise it, depending on how inflation numbers come out. I think they're going to stay steady until they're sure that inflation numbers are higher than what they thought it would be.
Yeah. In this environment with so much uncertainty, what does the property sector need from this administration in order to ride the waves?
Zonal values are too high. They're higher than market, and I think we need to review that because the zonal values now are the reasons why people are not selling. They have a good deal, but then when they realize that the zonal value the tax, because it's based on the zonal value, which is a higher number, their effective tax rate is not 6% anymore. Sometimes it's 10, sometimes it's 12. In other cases, it's 18. So that becomes prohibitive for many people to sell. So they just don't transact. If there are no transactions, it's not just the brokers that don't make any money. It's the government, because the government is the biggest partaker of that
like
transaction.
in any trading, we want buyers and sellers. We want sales being made.
Volume.
We want volume. We don't want steady because no one makes money when people hold. Let's talk about outside Metro Manila. Where is the demand genuinely strengthening when you think regional, when you think outside of the National Capital Region?
Yeah, I think Mega Manila, so the perimeter of Manila, especially Cavite, Laguna, will do exceptionally well. It's been doing well, and outside of Manila, these two geographies will continue to do well. I'm excited about Bohol. I continue to be excited about Bohol because Bohol has got everything to offer tourists except snow. And you do have an airport that is operational. It is international and easy access. It's got power. It's very close to Cebu, etc. It ticks many boxes. So that, I think, is exciting outside of Manila. Iloilo has always been a champion. It continues to be the most transformed geography. Shout out to Mayor Treñas. And I do think that Iloilo will continue to do well. Davao continues to be a trading hub. BPOs continue to expand there. BPOs continue to look for space in Davao. It's one of the few places in the market where there is more demand than supply, just like in Bohol, just like in Iloilo. And Yeah, I think those are very, very promising geographies.
Yeah, okay. All things considered, how is this second half shaping up? When you look at everything as a whole, when you look at softer growth, when you look at rising inflation, when you look at the possibility that the BSP is either going to pause on interest rates or maybe even jack them up. When you look at that, how does the trajectory look for the second half of 2026?
It's going to hurt. It's going to be very painful. The months of March to August, September, it's going to hurt it's going to be rough for many, many people and many industries. And the good news is that everyone in Asia is trying to avoid a zero supply situation. And the ones who have more are trying to give more. Mm-hmm. Yes, there are export bans right now, but that's only right now until they resolve what happens out there in the Gulf.
Okay, well, let's end on a positive note. So as we see that the second half is going to be rough, remind us of the positives, David. What do we have looking forward? You've already mentioned a couple, growth outside Metro Manila. You've also mentioned the office market benefiting from international firms coming to the Philippines. What else can we be excited about in the second half amidst the odds?
I think remittances will continue to flow in. The BPO market is going to continue to grow because of what's happening in the world. I'm very excited. We still continue to do deals in the billions of pesos, some of them in the tens of billions of pesos. Amidst all of this, these deals continue to happen because people appreciate that the Philippines in the long term, even in the midterm, will do well. There are strong fundamentals happening here that you find in very few places around the world. So I think that's going to tide us through, despite what happens in the next 6 months.
Strong fundamentals to tide us through. David Lichu, thank you so much for your time this morning.
Thank you. Thank you for having me.
We're taking a quick break. Up next, global markets, what's moving and why. Keep it here on Business 360. Welcome back. The Senate is pausing its probe into the multi-billion peso flood control scandal, delaying what could be a major test of accountability at a time when public trust is already under pressure. Senate Blue Ribbon Committee Chair Panfilo Lacson has put all hearings on hold, saying the probe will only resume once key requirements are completed. These include a sworn affidavit, former Ilocos Sur Governor Chavit Singson, and additional backing from fellow senators. Lacson says he needs at least 11 signatures to advance the report to the plenary, but so far only 4 have signed: himself, Risa Ontiveros, Francis Pangilinan, and Bam Aquino. The draft report recommends a preliminary investigation into several high-profile officials linked to the controversy, including former House Speaker Martin Romualdez, as well as Senators Jinggoy Estrada, Joel Villanueva, and Francis Chiz Escudero. In other news, a 29-hectare government property in Batangas is now under scrutiny after the Commission on Audit flagged its transfer to a private company without public bidding. COA says that the transaction took place in 2019 during the term of then-Governor Hermelando Dodo Mandanas. The property originally acquired by the Batangas provincial government for about 581 million pesos for a planned food terminal project was later transferred to Libertad Logistics Integrated Zone Builders Development Corporation for 87.5 million pesos. COA is now asking Batangas Governor Vilma Santos Recto to submit a written explanation to justify the transfer of ownership. The audit also noted there was no public bidding and no prior COA approval for the sale. Libertad was later acquired by Abacor Capital Holdings in 2021. The United States military is planning a 1 million barrel fuel depot in Davao by 2028, a move that could expand its reach in the Western Pacific amid rising regional tensions. The U.S. says that the facility will boost logistical support for warships and aircraft operating away from traditional northern hubs. Once operational, it could serve as an alternative refueling site to Subic and Manila. But the Davao City government is pushing back. It says it will not support the project if it does not directly help Filipinos, such as easing fuel and commodity prices or improving living conditions amid the ongoing crisis in the Middle East. Power bills are set to go higher this April as transmission charges increase, just as summer demand also starts to pick up. The National Grid Corporation says the overall transmission rate for the March billing period rose by 4.26%. So when your bill arrives this April, expect it to be higher as both charges and usage move up. The NGCP says that the increase came from higher transmission wheeling and ancillary service rates. The company adds it does not earn from ancillary service charges, saying these are passed on to generators and the market operator. Malampaya, the country's only major source of indigenous natural gas, may have just bought the Philippines more time, potentially extending supply by up to 6 years. The Razon-led group behind Malampaya says new wells could keep the gas field producing for at least 6 more years. Prime Energy says 2 new wells have already been completed and tested, while a third is still being drilled. If sustained, that gives the Philippines a longer runway for its only major local gas source, buying time as the country works to secure more stable energy supplies amid the global volatility. Synergy Grid and Development Philippines, the listed holding firm behind the national grid, saw profits surge after finally booking years of regulatory recoveries, a move that also signals stronger cash flows in a critical part of the country's power system. SGP booked more than 20 billion pesos in profit attributable to parent in 2025, more than double the year before. Revenue jumped over 60%, driven mainly by the recognition of 58.1 billion pesos in maximum allowable revenue, including recoveries accumulated over several years. In practical terms, these are previously approved earnings that are only being booked now, strengthening the company's balance sheet as demand for power continues to rise. Following these strong results, SGP declared a first quarter 2026 dividend of 34.74 centavos per share. Cebu Pacific kept passenger traffic growing in March, but with fuel costs surging, the airline is now shifting to a more cautious plan. The Gokongwei-led carrier flew more than 2.5 million passengers in March. That's up 11.5% from a year ago. Domestic traffic rose to 1.85 million, while international passengers reached 613,000. The airline says that the increase was driven by expanded seat capacity, with load factors remaining stable. But into the second quarter, Cebu Pacific says it's adjusting flight frequencies as jet fuel prices nearly doubled in March. They add that fuel supply is secured through June, with more than 70% of its fleet made up of fuel-efficient Airbus Neo aircraft. Let's take a look at how global financial markets performed overnight. Wall Street ended mixed as the benchmark S&P 500 and tech-heavy Nasdaq rallied to record closing highs as investors were encouraged by corporate earnings and hopes of progress in the U.S.-Iran negotiations. The Dow Jones Industrial Average lower by 0.2%, the S&P 500 higher by 0.8%, and the Nasdaq up by 1.6%. A mixed picture over there in Wall Street. Over in Europe, markets finished mixed as well. The UK's FTSE 100 lower by 0.5%, Germany's DAX flat with an upward bias, and France's CAC 40 higher by 0.6%. Let's take a look at how local and regional markets are doing. As of 9:57 this morning, the PSE index is trading to the upside, up by 0.5% to 60.93. Volume is at 433 million, valued at 1.8 billion pesos. Market breadth bullish with 67 advancers, 47 decliners, and 55 stocks unchanged. Taking a look at other Asian markets this morning, right now the Nikkei 225 is trading to the green, up by 2.4%. Hong Kong's Hang Seng Index in the green as well, up by 1%. Shanghai's Composite up by 0.5%. And Singapore's Straits Times Index going the other way, lower by 0.25%. We're taking a quick break. More stories when we return. Keep it here on Business 360. Welcome back. Even as the property sector navigates softer growth, Rockwell Land closed 2025 with a stronger profit jump, up by 28%, driven by solid property sales and a one-time gain from the Alabang Town Center deal. Net income rose to 4.7 billion pesos. Rockwell says reservation sales also picked up, strengthening its revenue pipeline going forward. The developer also booked 680 million peso bargain purchase gain from its acquisition of Alabang Commercial Corporation, the company that owns and operates ATC. Consolidated revenues grew 4% to 20.9 billion pesos. Residential development remained the core of the business, accounting for 79% of total revenues in 2025. Still on property, Antonio-led Century Properties delivered a 14% profit gain in 2025, riding strong demand for first home buyers. Net income reached 2.77 billion pesos, while revenues grew 12% to 16.4 billion pesos. Growth was driven mainly by its first home brand, First, which accounted for about 3/4 of total revenue. EBITDA rose 21% to 5.3 billion pesos. The company also expanded its suburban footprint with new projects in Cavite and General Santos City. As developers bet bigger on wellness-driven living, MegaWorld is expanding its push into the space with a 12 billion peso estate in Batangas, now moving into its next phase. The property giant says land development for San Benito Private Estate in Lipa City will start in the coming months. The 25-hectare project is being developed with a group behind the farm at San Benito, positioning it as a wellness-focused community. The estate will feature private villas, residential lots, and commercial spaces, with about half of the property set aside for open spaces, forest reserves, and natural waterways. In other news, the Securities and Exchange Commission is rolling out new rules for so-called umbrella funds, a move that could make investing more flexible and expand options for Filipino investors. Under a new memorandum, the SEC is allowing a single investment company to run multiple sub-funds under one legal entity. Each sub-fund can follow a different strategy, from equities to bonds and other fixed income portfolios. Eligible firms must have at least 100 million pesos in paid-up capital and include a unitized umbrella fund in their name. The change also means lower administrative costs for fund managers, which could translate to more choices and easier access for retail investors. The Bureau of Internal Revenue saw collections pick up in March, signaling resilient tax intake despite external pressures. Preliminary data shows gross collections reached 198.7 billion pesos, up more than 11% from a year ago. The BIR says solid domestic activity helped support collections, even as the Middle East conflict added strain. But tax refunds also surged, with more than 11 billion pesos released, over 5 times last year's level. That brought net collections to 187.4 billion pesos, still up 6.68% year on year. The Bangko Sentral ng Pilipinas is seeing mixed trends in financial inclusion in 2025, with more young people and women opening accounts, though overall ownership is still slipping. The BSP's latest survey shows account ownership among Filipinos aged 15 to 19 rising to 34%. But among adults, ownership dropped to 50% from 56%, partly because there are fewer loan-linked accounts from microfinance groups and cooperatives. The data also shows women are now ahead of men when it comes to account ownership. Female ownership rose to 25% from 20% in 2021, while male ownership declined. The good news, financial literacy and risk awareness are also improving, suggesting more Filipinos are becoming smarter about their money. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.